Ladies and gentlemen, traders and investors, a very warm welcome to our channel Polo Vega. In today's video, we shall talk about the asset classes which have been affected by the newly developed geopolitical situation during the last 8 days. The market has been basically affected because of two major factors as discussed in our last video released at the time of commencement of US-Israel-Iran war. The first one being the most important one, and that is the closure of Strait of Hormuz affecting safe passage of all ships through the strait. This in turn is going to negatively and majorly affect the tankers trade and therefore the supply chain for oil and gas. Also, the shutdown of refineries in the Gulf countries after the Iranian attacks is going to have an effect on supply of oil and gas. The second one shall be the inflationary effect of rise in energy prices and its effect on policy-making decisions of various central banks which have been trying to bring inflation under control after the vast expenses incurred by all governments during the pandemic, followed by the ill effects of Russia-Ukraine war and the Israel-Palestine war. The stock markets have managed to regain some of the losses after the immediate drop seen on Monday of last week, but oil and gas prices have been rising continuously, while the US dollar has seen some drop on Friday after showing a lot of strength during the week. In today's video, we shall see the charts of US oil spot, gold, silver, nat gas, and the US dollar index DXY. Before going through the charts, let's look at the disclaimer slash disclosure clause. The contents of the presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 32nd of a series of interactive videos aimed at educating our viewers, and we'd like to warn all our viewers of the risk associated with the business of trading and investment. Securities investment and trading is highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on analysis of the market, and we do not advise, recommend, guide anyone to take any trade based on the contents of this video, and we do not take any responsibility for partial slash total losses arising out of trades based on the contents of this video. The chart that we see in front of us is the US dollar or the DXY chart. It's a daily chart, and we've visited this chart almost every week right from the beginning of this year. The index has been having a range-bound trade ever since the middle of April 2025 and has been maintaining this move all through last year and also the first 2 months of this year. It's this particular week that the US dollar in particular has shown some strength when it shot up from 97.5 all the way to 98.9 on Monday. But after that again it's been going sideways and has not been able to break out of its upper limit or the range where it has been hitting every time and coming back down all the way to 95 on earlier occasions. As of now, it's been there, and on Friday it saw a bit of drop, and one needs to see if it can gather enough strength to break out of this 100 area in this particular week. It all depends upon the geopolitical situation and the economic data that's going to get released this week before the Fed takes its decision on rate cut in the following week. That's it for the US dollar as of now. Just the chart that we see in front of us is that of US oil spot. As one can see that the asset class has had some explosive rallies during the last 6 trading days, starting on the Friday of the week earlier when it broke out of the 65-66 area and printed a small rally. That was followed by an explosive move, and then further on until we had the biggest rally on last Friday when it took out almost all suppliers line on the left side. The first supply area or the bearish area on the left was around 72 to 75. Then we had the next one at around 75 to 77, and then we had the area around 82.5. Then the next one was around 85 to 87.5, and finally it's now at the supplier zone between 89.5 to 95. It may take a day or two to take out all the supply lying in this area between 89 to 95, and if it succeeds, then it could take out the other supply areas between 95 to 100, followed by the area between 108 to 110, and finally the area between 115 to 125 to reach one of its earlier highs attained during 2022, which was at around 126.85. And if it succeeds in breaking this area, going by the current geopolitical situation, then there is no supply area above this particular zone, and it could go up to 150 or 200 depending upon the geopolitical situation that stays or changes during the next couple of weeks. But if the situation improves and if the suppliers manage to bring it back, or say they may try to come into the market and bring the price down a bit, then the first buyer's area or the area which is where resistance has turned into support is the area around 75. And if the suppliers manage to break this area, then we have a fantastic buying area at around 65 where this explosive move began. This particular support area will certainly hold a lot of supply orders until it gives in and allows the trade or allows asset class to break down further. But as of now, as we can see with the explosive move that it has had in the last 6 days, one can stay at the sidelines and watch it go up if you have not managed to participate in the upgoing trend. But if you've missed the chance, then one needs to wait for it to take a dip, and you could join the rally by getting into the trade at around 73 to 77.
Ladies and gentlemen, the chart in front of us is that of natural gas, and it's the daily chart. And the reason we're looking at this chart as of now is because of the current geopolitical situation, which could throw open some very good bullish opportunities. As of now, we can see that during the last 1 week or the 5 trading days, it has printed 5 or 4 bullish candles with 1 bearish candle. But if this particular asset class manages to print some more rallies, and if it breaks this particular bearish area between 3.5 to 3.7, then we have a massive opportunity in this particular asset class. But it all depends upon the situation at the Strait of Hormuz and the number of plants or storage facilities which become inoperative during the coming weeks because of the war between US, Israel and Iran. Therefore, one needs to be very careful, and if we intend to seize the opportunity of taking a buy trade or a long trade, then we could enter anywhere between 3.0 and 2.75 with a nice comfortable stop loss at around 2.6, which is going to give a lot of room for the particular price to play around before it comes up and tries to break out of the area around 3.5 and 3.67. But as of now, we'll have to wait and watch to see how explosive can this asset class be during the next few weeks.
Ladies and gentlemen, traders and investors, we hope that our video has been informative and exciting enough for you to come back and watch them all every week. We shall continue with our weekly commentary and analysis of the asset classes which have been affected because of the information flowing around in the economic circles, as well as the effects of the geopolitical news that creates opportunities and threats in the environment. Therefore, we would request you to please like our video and give us a thumbs up, press the button underneath to subscribe to our channel Polo Vega, and come back and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video, and please like, share, and subscribe to our channel Polo Vega.